right, good afternoon and welcome to Bookkeeping 101, Making Sense Out of Your Books. And our instructor today is Lou Reverso, Jeffco BRC's business advisor. So Lou, I'm gonna go ahead and turn it over to you. You can share your screen and we'll kick it off.
All right. Before I share my screen, I'd like you to tell me a little bit about your business and what specifically would you like to get out of today's lesson? Why don't we start with Amanda?
I'm currently in the stage where I'm looking to see if the business is viable.
And what kind of business is it?
Freelance.
But what will you be doing?
Writing and editing.
Okay. All right. And what would you like to get out of this class today?
Just the basics of how to keep track of everything.
Okay. All right. All right. Evelyn, how about you?
I go by Evie. So my business is a certified legal nurse consultant. So I work with attorneys in trying to interpret the electronic medical record. And there's about 12 or 13 different services that I provide. And I work coast to coast. So I'm not really totally local. And the main thing, couple of main things, I very likely will have to use an accountant, but I want to be knowledgeable enough about my bookkeeping needs that I can communicate that to the accountant and make sure that the accountant's doing what I want him or her to do. And at first, I may do these books myself, but I need to know the touch points as to what good bookkeeping should include.
Okay.
I'm used to doing a pretty good budget, but I like to know how does that apply to a business?
Okay. Evelyn, I'm sorry, Evie, how are you keeping your books right now, or are you not?
I'm doing a paper keep. I'm not doing them online or internet because I don't think I have the knowledge.
Okay.
In terms of the internet use.
Spreadsheet.
So I think I have too much to know in order to do it on the internet.
Well, are you doing an Excel spreadsheet?
Of my own making, yes.
Okay, good. All right.
Yes.
And we're going to talk a lot about Excel spreadsheets also.
Good, good.
Amanda, if I could ask you, what are your plans for keeping your books? Is it a program or are you looking at doing an Excel spreadsheet?
Excel.
Okay, good. Thank you. All right, Emily.
I'll just pop in real quick. After you guys are done sharing, if you're not talking, if you could please keep your computer on mute just to cut down on background noise for the recording and just so everybody else can hear, that'd be great.
Why, hello again, Amira and Lou.
You
For
remember
the 48th time. So I am creating Geek Out Cafe. It is going to be a coffee shop event shop that also sells retail goods. And we are going to be using QuickBooks, hopefully. And out of this class, I am hoping that I can get to figure out how to do profit loss or really anything math related to this business, because me and math are not friends. So I'm hoping I can find ways that I can do it with a spreadsheet so I don't have to. That'd be great.
Okay. Great. Thank you, Emily. And Gina.
Hello, everyone. I actually am I think a step further in that I hired somebody to put all of my business on QuickBooks this last year because it was getting very overwhelming. But now my business is pretty much at a halt. I'm in events, so I don't, and after today, just hearing what Polis had to say today, I don't think events are going to be coming back anytime soon in the large scale as what I do. But what I thought it would be is this would be a good opportunity for me to learn more about how I can do my books myself. So hopefully, given I'm not going to have the budget that I had last year to hire somebody, I'll probably have to try to learn how to manage my QuickBooks on my own, which I know a little bit about it, but not a ton. And I do keep a lot of stuff on spreadsheets. Every single event is on a spreadsheet, an Excel. So I just want to get a little better understanding of it all. The more I learn, I understand it a little bit more. So
Now, are you doing QuickBooks Online or are you doing desktop QuickBooks?
desktop.
Okay. What the good part for you is, Gina, is that she probably has at least a year in there. So a lot of the stuff will automatically come up. And so you'll be able to see that, which is going to make it doing yourself easier.
Right.
Okay.
Okay.
All right. Rhonda. Rhonda, are you with us? I don't see her.
Rhonda, if you can hear us, we can't hear you. So if you want to type in the, yep, she's typing in the chat. Hold on. No, we can't. We can't hear you. So if you just want to put a quick note in the chat about what kind of business you have, like what's the industry, what you're doing, and how you are currently keeping your books. Consulting business. And are they in QuickBooks? Are you doing them? And she created her own Excel spreadsheets as well. Thanks,
Okay.
Rhonda.
So we'll talk a little bit about QuickBooks, but we'll probably really emphasize doing what a Excel spreadsheet looks like. All right. So I'm going to start with going and just doing some overview on bookkeeping. And then I will actually pull up an Excel spreadsheet and show you how it's set up and what goes into each category. If you have a question, please just unmute yourself and ask the question. You don't have to wait till the end or a break or anything like that. All right. So I am now going to share my screen. Uh-oh, Amara.
Yes. Oh, yes, I took that off. Yeah, hold on. Let me make you a co-host.
Or just do share screen.
Okay, I just made you a co-host.
All right, thank you. And then we will go into okay, now we're ready. All right, so what I wanted to talk about is just what is bookkeeping. We hear so much about bookkeeping and accounting, and oftentimes what happens is that they are interchangeable in people's mind, but they're very, very different. So bookkeeping is basically the day-to-day operations of what's going in your business. This actually then gets sent to an accountant who can then do taxes. So it's kind of a moving along of what it is. So here's some of the differences between bookkeeping and accounting. I'm not going to read to you, but one has to do with taxes. As you can see, bookkeeping is a sub-account. Accounting is really the place where you're going to hear all the fancy words and what's going on. So preparation of financial statements. So this is all the different parts of it. All we're going to concentrate on today is the bookkeeping part. I will tell you how it goes into accounting as we go along, but we won't. I'm admitting someone. Give me just a second. There we go. Oops.
I got them.
Thank you. Okay. Now, people will ask you, especially your accountant will ask you, are you doing accrual or are you doing cash? Now, 90% of the time, you're going to be doing cash. Who will be using an accrual basis would be someone like probably you, Gina, where you get a small piece at the beginning or a down payment, and then you get paid somewhere halfway in between, and then you get paid at the end, correct?
Kind of. I mean, I know I'm set up as a cash business, and that's just how my accountant said to do it. So
I don't see any of you really being on an accrual basis. I want to ask Dan here. Dan?
Hi.
Hi, how are you?
Good. Sorry to be late.
That's okay. Are Dano and Sheridan going to join us?
Yes. Yeah, I think I just signed up for myself, but he can pop in and be watching. Anyway, he's my son, and
Okay.
we are on cash.
Okay. Now, Dan, are you doing something different than the Windows? Because I see a new company name.
Yes. Just windows, doors. We're licensed contractors.
Okay. Okay. I've worked with Dan in the past, and he did Windows before this. All right.
My payment system is intermittent. I often get a retainer fee up front, and then I acquire other payments as that particular down payment is used up, or if different services are requested.
Okay. You can still do cash, Evie.
Okay.
Okay. And it'll be easier for you than trying to do accrual.
Sounds good to me.
All right. So who needs to do bookkeeping? I'm going to see every hand in the air. We all need to do bookkeeping. Whether we do it ourselves or we hire it, it doesn't make that much difference. It's still the kind of thing that you as the owner need to understand. Now, many of you will use an independent bookkeeper. Some of you might even have a bookkeeper on staff, or many accounting firms also have a division, a bookkeeping division. But I don't care who does it as long as it gets done. However, let me see if it's on the next page. So one of the things I want to tell you is, even if you have a bookkeeper, what I want you to remember is that there's one piece of the bookkeeping that you should keep to yourself. And that piece is very, very simple. That is the reconciliation. What do I mean by reconciliation? That means when you get your bank statement, you compare it to what your books say. Now, why do you think I'm telling you that you as the owner should do that? Anybody?
Because it's our money.
Number one, it's your money, but number two, it's the most common place that you're going to find out if someone is committing fraud or trying to steal from you. And the sooner you find that out, the better. And I could give you story upon story upon story about that. Okay, so we talked about who. Now we want to talk about what. There are 2 points. I don't expect you to read this. I just want to show you the difference. There's 2 parts to financial statements. One is your balance sheet, And the other one is your profit and loss. Now, your profit and loss is your day-to-day, what went in, what went out, and what can you write off, what can't you write off. Your balance sheet, and you will only have a balance sheet if you're in QuickBooks. If you're doing Excel, your balance sheet will actually be done by your accountant when they do your taxes. But the balance sheet tells you how good or how poorly the business is doing, not just cash flow. Cash flow is going to show up in profit and loss. But like if you have a lot of loans, they'll show up on your balance sheet. If you have a lot of tools or equipment or materials, all of that will show up on your balance sheet. Any questions about the two parts? No? Okay. So we talked about who, we talked about what. Now we're going to talk about when. This can be done every day. It can be done weekly, but at the very least, you want to do it monthly. So if you do it no other time, when your bank statement comes in, be sure and put the two together and enter them. Because what happens is a lot of times someone else will write a check or you'll write a check and forgot about it. So that's why we say to do it. Or if you do a major purchase, like if you do something, you know, normally you keep $500 as a balance in your checkbook or $1,000 or whatever. But if you do a major purchase, be sure and enter it in there so you don't lose it and it doesn't get, that's where we bounce checks, and this is what we don't want to do. And that's why we reconcile on a regular basis. And again, even if your bookkeeper is reconciling, you as the owner should go back and check that at least every other month. Okay? I tell you a real quick story. Company had a bookkeeper for 13 years. She had been embezzling for 9 of those. And it wasn't until they sold the business did they find that out, because the owner never looked at the bank statements. Did that scare you?
Yeah.
Good.
Yikes. That's having a little too much trust.
So why do we want to do this? All right. We want to do this because we want to stay on top of it. We want to be able to plan, and looking at last year's, looking at the last couple of months really helps us plan for the future. The other reason we do it is so when it comes time for taxes, you're not spending 4 hours at your computer trying to get all your tax information in, and it's ready to go. The other nice thing about that is you could get your taxes to your accountant, or your accounting, your bookkeeping to your accountant earlier so that they'll have more time to work on it. And also it helps us keep a healthy company. All right, so how? So we've talked about this. We've talked about doing an Excel spreadsheet. We've talked about QuickBooks. And then for those who are older, you can remember the general ledger sheets, which are basically Excel, but you have to add them up yourself. So let's not use this one as much as these two, all right? Now, let me just talk about QuickBooks a little bit. There are 2 types of QuickBooks. There's QuickBooks Online, and then there is what is called desktop QuickBooks, where you actually either buy the disk or you download the program from Intel, and it's only on your computer. So you can only access it from one computer. I will tell you that it is much more difficult to use QuickBooks Online than it is to use the desktop. It is also much cheaper because you can buy the program for about $150. And for all of the businesses that we're talking about here, the very least one of the online programs you want are the $39 a month. Okay. Other than that, they don't give you enough information. All right. Any questions about QuickBooks?
No.
All right.
Is
So-
it wise to, I do have a question. Is it wise to go through a QuickBooks tutorial? I know they offer those to go through the QuickBooks online classes.
Correct. They're both, and there's also people that are called QuickBooks accountants or QuickBook experts, and they have done quite a bit in the past to get to that designation. All right. This is what a profit and loss is going to look like. So your first category up here are your sales. You could see that I have like 13 or 14 categories there. You could have one single category, and I'm going to talk about more of this later, but you could have one category for sales, or you could have 15. Like, let me pick on Emily right now. Emily's going to have at least 3 sections to her sales. She's going to have where people rent out the rooms, so room rental. She will also have the income that she gets from the stuff that the
Coffee shop.
food and beverage she's selling. And the third line will be from the retail that she's also selling games. So she'll have at least 3 sections. Now, why am I asking her to separate those sections? Anybody have any idea?
I'd probably say, at least for me, it'd be easier to track not only how much from each section that you're making and kind of like what's the bulk of your business, but it'd also be easier to track if you have like seeing how much money goes out for those particular items as much as it comes in.
Correct. And that's exactly it. What if she finds out that after 6 months, she's looking at her bookkeeping and she finds out she's really not making enough money in one of those sections? She can either increase it or she can delete it, but at least you know where the money's being made. Okay. She also brought up something else, which I want to talk about, and that is how much got paid in each category. So you could see here, the second thing that we have, where's my cursor? Where are you? Oh, there you are. Is the cost of goods section. There we go. The cost of goods, she can even break those down in the same 3 categories that she had her sales in, or she could break it down by supplier. So those are the 2 main ways we break down the cost of goods. Now, she could do both. She could say games, and then she could have the name of her 2 biggest suppliers, and the third one could be other. And then she could have food. She could have the name of the 3 places she gets food. And then she could go into the room rental. So you can break this down as much or as little as you want to. And I am going to go through what goes in each category. And then the last part are the expenses. These are all the overhead that we use. That very much includes all of your payroll. It includes your advertising, it includes your computer maintenance, your accounting. If you travel, it includes all of that. So anything that does not go immediately into making the product, then it goes into expenses. And this gets a little tricky, and we're going to spend a lot more time on it. Any questions about the categories? Okay, is anyone going for a bank loan? Good, then I don't have to get into that part. So now I'm going to go back to the balance sheet, the different parts. You have assets, and that can include current assets. Those are things like a current asset would be money in the bank, okay? A fixed asset would be a piece of equipment that you have, but you might still owe on. So that's going to be the part that you paid for is going to be on the fixed long term. The part you still owe will be in the liabilities long term, right? So I buy a piece of equipment, I put $2,000 down. The equipment cost me $5,000, so I still owe $3,000. The $3,000 would be under liabilities long-term, and the fixed assets would be under, the $2,000 would be under the fixed asset long-term. All right? What's shareholders' equity? It's the money that you put in. It's the money that you take out. You're the shareholder. So that is the three parts. So suppose if you're an S Corp, you could take a salary and then you could also take a dividend. That dividend would go into shareholders' equity. All right? This is a little confusing. Do we have any questions yet? All right, we'll go to the
No, I have a question. Back to where you said the shareholders' equity, and then you mentioned salary and you mentioned dividend. It's only the dividend that goes into that shareholders' equity, right?
If you were getting a paycheck, then that whole paycheck would go under payroll. If you are not getting a paycheck and you're not an S Corp, you're just paying yourself, it would go, all of the money you take out will go under shareholders' equity. So here's here's some examples. So a current asset would be, as I said, cash. If you have you have 3 or 4 different clients who haven't paid you yet, they would be under there. Your inventory would be under there. Then your fixed assets would be your building, your equipment, your land, or any long-term investments. Any questions on this?
I have a question.
Okay.
So on the assets, if you get a deposit,
Mhm.
because sometimes I'll get deposits, and I know this is why you said I should be accrual, but I'll get deposits. I have an account, they go in, an escrow account, and then they just sit there until I need to spend them for each individual project. So would those be, how would I categorize those?
They would
those be
current assets.
They would be under the current.
Yes, because you're going to spend those within the next 3 to 9 months, correct?
Sometimes, yeah. Sometimes I have deposits from 1 year and they roll over into the next year.
Okay.
So that's what I was asking about. So I would count those as, I just am wondering how those would go in and out.
You know that you're not going to spend any more money on this client for at least 6 months. I put it more into a fixed asset, and then you could pull it out and put it into current assets when you need to use that money.
Okay.
Okay?
Mm-hmm.
Any other questions? Okay, then we get into liabilities. It's the same term. It's the same thing, short or long term. So short terms are like a short-term bank loan. By a short-term bank loan, I would say a year or less. All of your payroll liabilities. So you may pay your payroll quarterly, and with that, all the money that you've withheld and you matched could go into short-term liabilities, because within 3 months, they're going to be out of there. And then all your accounts payable would be under short-term, because most of those are going to be paid within a month or so. All right. Now, long-term liabilities are your mortgage or your lease payment, a long-term bank loan, something that's over a year, any leases that you may have on equipment, which is very common, or any equipment loans that you may have. All of those go in long-term liabilities. All right. Questions? Okay.
Yes, I have a question.
Okay.
I had one just before you left that last section. If I have 3 clients, and I usually have at least 3, sometimes 5 clients, lawyer clients that I'm working with at the same time. And if I have one who's giving me a $10,000 retainer, one that's given me 5, one that's given me 2, I need to be able to keep those funds in their separate place and then opposite the expenses that go directly to that particular client.
Correct.
How do you see that being bookkept?
Can you ask the last part of that? I didn't hear.
How would I show that in my bookkeeping so that I know exactly what funds that is available for one client opposite his particular or her expenses, and then another client who's got something else that I've done and I'm using X amount of their dollars for their services
Now,
or for their needs?
Evie, are you doing, let me just look here. So you actually have an accountant that does this, or you are thinking, explain to me how you're doing your bookkeeping right now.
Okay, at the moment I have a ledger sheet, and I have a ledger sheet for each client.
Okay.
And that ledger sheet shows me when they gave me a deposit, and I in turn identify the hours that I have serviced that client opposite the amount of money that comes out of their balance. So that at any given moment, I try to make sure I know exactly how much money each client has left.
Okay, so you can do yours a tad different. So under your sales, you would have each client's name.
Okay.
And then under cost of goods, you would have those by clients as well. Now you can break them down further if you want, but yes, you would have to do it by client because of you don't want to put everything in one basket.
Yeah.
Did that make sense?
Yes, it did. Yeah.
Okay. All right. Equity, this is the same thing. Most this is what you've put in. So suppose you start the business with $10,000. That's your paid in capital and that's your equity. So when you take dividends, you can put them against your equity. So you're paying yourself back if you're paying back a bank loan, that wouldn't be an equity. This is just the money you have put in, the money you have taken out as the owner. Or does anyone here have partners? Dan, how are you running yours? Emily, you look like you have a question on that.
No, I was saying, would my husband technically count as a partner in that? Because I mean, we both have money that we're putting in. So, because we both have separate accounts, but we're both putting it into one thing, but we're also both married. So we're both married. I would hope we're both married.
You could do it either way. You could put it as the owner's capital, or you could put yourselves as you put this much in and he put that much in, but it would both be in equity.
Okay.
All right.
Yep.
Dan, do you have partners or are you still the head honcho.
Excuse me, do I,
Pardon?
I'm sorry, do I have,
Do you have partners? Is Sheridan going to be a partner? Is he going to work for you?
yeah, he's, like we discussed before, he's bringing himself on at 10% a year
Okay.
until I'm done. And
Okay.
so, yeah,
Which is really cool. I love the way Dan's doing this. He's bringing his son on, and his son is buying into through equity at 10% a year. So hopefully in 10 years, Dan gets to retire, Sheridan gets to take over. Now, Dan, are you Dano or are you Daniel? Is there another Dano here?
just, am I
You,
need,
I see Daniel, Sheridan, and Dano. Is it just your one son, Sheridan, that's going to be with you?
Dano's just, my nickname. That's what I go by for family, but. just-
Okay, so you signed up for 3 people and there's really
Yeah.
only 2.
Yeah.
Okay.
Yeah, that's my imaginary friend, you know?
Well, good. I'm glad you have one.
You know, I don't have any real friends, so I got to have imaginary ones.
Come on, Dan.
busy. I'm in business for myself, you know. I have no time to make friends, so I make up my own. Kidding.
Okay. So now we're going to talk about the profit and loss. And we've talked about this. We have the income, we have the cost of goods, we have the expenses. Sometimes, especially with new businesses, I actually add a 3rd category, which is or a 4th category, which is payroll. Now, payroll is an expense, but sometimes because it can get confusing, I put it in its own category. And I'll show you that on the spreadsheet when we get to it. Okay? So what goes into income? What goes into income is any money that comes in, all right? So suppose we do this. Suppose I am an owner and I'm running along and I notice that I want to give an infusion to the business. So I put $5,000 into equity, right? But that $5,000 is actually going into the bank. So then we move it from equity into income so we have it in our bank account. Evie, I bet that's what you do quite a bit. Okay. Then cost of goods. This one, again, it's money going out, but it's only for the things that go into making that project. Now, I'm going to pick on Dan here for a minute because I know his business better than most. So Dan used to do windows. I don't know if you're still doing windows, but I'm going to choose the windows. So Dan actually has the windows made. That is a cost of goods. That's right out of his pocket. He pays for that. Now, when Dan's putting that window in, he's also using caulk, all right? So the caulk he uses is actually part of his installation. So that is money going out, but it's to make the product or to put the window in. Now, he needs trash bags, just for when he's cleaning up, all the stuff that goes with that. Now, is a trash bag a cost of goods or an expense?
That's an expense.
It's an expense because it doesn't go into the making of the window, but it's part of the supplies that are needed by the company. This can get very, very tricky in what goes into cost of goods. So anything you buy directly and sell, like Emily, the games or the food, they go into cost of goods. That's not an issue. But suppose that you want to make a little purse holder for to sell for the accessories. All right. And you're making those yourself. Okay. Your time cannot go into the cost of goods, but the material and the thread and all of that can go into cost of goods. Anybody have a specific question they want to ask?
So
I
question.
have,
Jinx.
go ahead.
Okay. So like we're doing coffee. So obviously my coffee would be a cost of good, my all of that stuff. But what about like the cups?
The cups are not a cost of goods.
So a cup is an expense,
Right.
but the coffee is a cost of, this is,
Correct.
I'm out. Okay. Cool. Thanks.
And who had a question? Was that Eugenia?
Yeah, I did have a question. So if I'm doing an event and I have to rent tables and chairs, I have to hire talent, are those all considered cost of goods because I need those to produce the event?
Yes.
Or they can?
Yes, they
Okay.
are.
So then if I have to, if
Wait,
there's,
let me hold on a minute. You have to hire, what did you call it?
talent.
Talent.
Might be a band, it might be a balloon twister. I mean, it would be labor. There's that, but then I also have to rent a lot of things.
Mm-hmm. All your rentals will be cost of goods. If you're bringing in someone and paying them as an independent contractor, they would absolutely be under, they're actually an expense. So most of your talent, if it's someone that you're bringing in, let's say you're bringing in a band, the band is a cost of goods, all right? And you're bringing in a balloon twister. The balloon twister is an independent contractor, all right, because you're paying them separately. Now, if they charge you separately for the balloons themselves, then the balloons become a cost of goods, but they're still an expense.
So I guess this has always been tricky in my business because every single person I hire is an independent contractor.
Okay.
So I always assume they would, I mean, to me, if the event, you have the event and then you have all the expense of the event and, and that's kind of how it works.
They would be an expense of the event. Yes. So in this case, they would be a cost of goods.
Okay.
Normally, independent contractors are not, but in this case, they are.
And is it always the same or
No.
or is it just depend? Everything just depends.
Correct. Now, for you, do you use an accountant, Gina, to do your taxes?
Oh God, yes.
Okay.
Yes.
I would have, and I think you have this, you have a separate sheet that for each event, just like
Right.
does. Yeah. I would give that sheet to your accountant as well as your profit and loss sheet. And they can just look that over and make sure that things are in the right category.
So even if I have everything in QuickBooks, is it good to keep the Excel spreadsheet for each event just to have, or do you need one or the other or both?
I think for both you and Evie, you should have a ledger for each client. Now, I know what Dan used to do was he would have a folder on each client where everything was in that folder. You could do that, but because so much of what you're doing is cost of goods, I would keep a ledger. It's also good for you in case a client asks a question and you've got just their information there. Now, if you're using QuickBooks, there's another category that is called jobs. And you could do everything in QuickBooks, but make sure that everything is under the jobs category. So if a client asks, you can just pull up their job.
Okay.
All right.
Okay, my
That-
question that I had, Lou, was, let's say I have a particular client who, the case itself has to do with an OB case, an obstetric case. My expertise is not there, but I have access to hundreds of experts.
Right.
So I would subcontract for an OB expert. That person then becomes, and I have to pay her a certain percentage. That becomes an expense. What kinds of things for me as a consultant comes under cost of goods?
There, you will not have much cost of goods, Evie, because yours is almost all intellectual. You're not making something. It's more the intellectual property. So those independent contractors, they would all be expenses to both to you and to the client.
Okay.
I don't see really much that would be a cost of goods for you. Suppose that, and I know this is really weird, but suppose that you need to do a skeleton, you have the doctor asks you to buy a skeleton so he could point things out to the jury. That would be the only cost of goods I could see. Okay?
If I purchase those things, if I purchase those items purposefully for the intent of educating the attorney in a much more thorough way, that kind of an item becomes
A cost of goods.
okay. And there's paper stuff, of course.
I would check that with your accountant because each accountant likes to look at it a little differently. You know, the one thing I'll say about accounting and bookkeeping is the fact that this is not a science. It's really an art. So different people interpret it differently. So do check with your accountant on that, but see where they want you to put it.
Okay.
You should have very little cost of goods, Evie.
It's mainly paper items. I do a lot of mailing. I travel to and from attorneys. Is that a cost?
Those are expenses.
Okay.
Now, here's an example of something, Evie, that could get complicated for you. So suppose that Dr. A hires you and then you have to actually go to Philadelphia for a trip. So you're there during the whole trial, all right? Then Dr. A also pays you, besides your regular, he pays you travel. So you might want to have a place under your income for things that were sent to you or reimbursed to you that you have in the expenses. Make sense?
Sort of. That one's a little bit gray yet. There was a time when I traveled somewhere and I was asked to be present for mediation.
Okay.
And that was over and above the retainer that was given to me.
Correct. So I would have a line item under income that is either travel expenses. So they pay you, and then under expenses, you have your travel expense.
Okay.
So it's both income from the doctor that's different from the retainer.
Yeah.
And so you have it both in income and in expenses.
And those would essentially equal out each other in most cases.
I didn't hear you.
Those would essentially equal out each other.
Correct. Correct.
Okay.
All right. Shall we go on? Then we get into payroll. Now, payroll can be difficult because you have to break it down. So I get a paycheck. My gross amount is $100. The person who's paying me has to withhold the federal withholding. They have to withhold Social Security, which is 1.45% of the income that you've made. I'm sorry, the Medicare is 1.45. Social Security is 6.45%. And then they have to withhold the Colorado withholding, and then you get the rest. So suppose that was $23.50. So now my net income is, what did I say, $100? So it's now $75 or $74. Okay? That's that. Now, I'm the employer. I have to match Social Security and Medicare. And the Social Security that I'm matching is at the same level. So I withhold 1.45% or $2.37 for Social Security from your paycheck. Now I have to pay an additional $2.75 out of the business because the employer has to match it. The same thing with Medicare. We do not match federal withholding. We do not match Colorado withholding. What we do match are Social Security and Medicare. All right. There's one other thing that's not on this slide that should be, and that's workers' comp. So if you actually pay workers' comp, it's a payroll expense, but you pay it completely as the owner. It does not come out of that. I live in Denver. I don't know where other people live, but we had an actual thing on the ballot this year that says, do we want to have another withholding that is matched by the employer that is called paid time off for taking care of family or having a child? So that would be an additional tax that both employee and employer will have to pay if it passes. Who just had a heart attack there? Was that you, Emily? Who just went, All right, somebody did. All right, so this is payroll. Then we get into expenses, and these are all expenses. Now, what I'm going to do now is I'm going to stop sharing this screen. I'll come back to it later, but I'm going to pull up a different screen in Excel. Here it is. Now I'm going to share this screen. It's right here. Okay, can you all see this? You can start this any month you start the business, but I'm just doing it. You put the year. So this is an Excel spreadsheet. This is what yours would look like, okay? Anybody want me to send them this? Just let me know and I'll send it out. All right, so this is where you would put income. And for this one, I'm going to use Emily. So Emily's going to have room rental. She's going to have food and beverage. Do you want to separate food and beverage, Emily?
Nah. The food is so little that it's not even worth its own section.
Okay. And and instead of putting games, I'm going to put retail.
Okay.
So those are the three areas that she's going to break out by income. So in February, she rents out the place 3 times. It's $125. So she's going to make $375 in room rental. Okay. Under food and beverage, this is where she's going to make a nice chunk of money because everybody's going to want to come in, have coffee or whatever. So she's going to make $14.50.75. Yes, I'm making these numbers up. And then in retail, she sells 6 games. So how much would that be, Emily?
Let's say they're $50 a pop. So that'd be what?
So
300
this
bucks?
is real nice. Look, we do equals. There's $50 a pop times, and she sold 5. So I put equals 50 times 5, and it gives me the number. Okay, that's a nice thing that I like about Excel. So Emily has now brought in $2,075.75. Does anybody want me to use their numbers as well, just to show them, or is this okay? All right. So now cost of goods. What I'm going to do here, I'm going to insert several more lines. So what we're going to have here is we're going to have room rental. And then what we're going to have is we're going to have food and beverage. Now under food and beverage, she gets some of her stuff from Costco. She gets some of her stuff from Cisco. And then she gets some of her stuff from somewhere else, but we're just going to put other, all right? Then we go into games. And then she gets some of her games from
Alliance. And ADV or yeah, something like that.
And then other. Okay, so none of these should be bolded. All right, so now this room rental, she had no cost of goods to go with that.
So that wouldn't include like anything like, let's say, like things to clean the room, or if they needed like setup, or for like events, if they wanted to have like certain things or stuff like that. Would all those still count as expenses, or would they actually be the cost of goods?
No, they would all be expenses.
Okay.
Okay, now suppose that they wanted red and green plastic or paper tablecloths for their special event, and you bought that. At the end of the day, either they're going to take them home or you're going to toss them. That then would be a cost of goods.
Okay.
All right, following everyone?
Mhm.
All right, then she made $1,450 on beverage. However, she went to Costco and she spent $1,500 on coffee, or she went to her coffee supplier and bought that. Now, it's over and above that, but there's still some in the inventory. But the profit and loss, the way we're doing it, is showing what we have cash on hand. So this is also very much cash based, all right? And then she got $50 of stuff from Costco. She went to Restaurant Depot and bought another 65. So she didn't make nearly what she spent, okay? And then she sold 5 games at $50 each, and they were $25 each. So she bought 1 from here, 2 from here, and 1 from somewhere else. All right. Now, if she took them out of inventory, it would just go into income and it wouldn't come out of, she didn't pay for those this month. Am I making sense? Everyone following me? Evie, you following me?
I look at my cash flow probably different than most because most of my stuff is custom made
Right.
for a particular customer. So I look at an expense as something that could be an expense for any of my customers all year long. But I look at a cost of goods sold as that cost for that particular file, that particular job, because I do a job and I generally can't do another set of windows in a household. So I do that as a cost of goods sold. I do my expenses as this tube of caulk. I could use that for Mrs. Jones or for Mr. Smith.
Correct. But when you're billing them, you're putting in some cost for caulk and stuff like that, even if it's not a bottom line.
Yes.
Correct?
Yes, there's some things that are just generic that I
Right.
can use throughout the year, specialty tools even. It's
Okay.
not for that particular job. So that's how I divide it. But I know every business is different in the way that they cash flow, and
Right.
sometimes it's everything's a cost of goods
I'm
sold.
going to use your business for payroll. So he has himself, and he gets paid $5,000 a month, and that goes under officer salary because he's the owner. Now, I'm missing a line. Hold on, let me add a line here. So that's officer salary. Then we have payroll. So this week, most of your installers, it looks like I've lost everyone. Am I getting into too much detail?
I think you're good.
Gina, am I getting into too much detail for you?
No, I'm listening and I have to step away for a minute because I have something going in the kitchen, unfortunately.
Oh, I think you have.
So, yeah, but I'm listening. This is stuff that I have other people do, but I'm listening. Just
Okay.
I do want you to send me the spreadsheets. I sent you my email.
Okay, great. All
Yeah.
right, then we have.
I'm still here.
So Dan makes 5,000. Sheridan makes 3,000. Okay. Now, besides Sheridan, do you have anyone else on payroll? Dan?
No, I have independent contractors, including my business partner.
Okay.
So,
Hold on to those independent contractors because we're going to
Yeah.
come back to them. All right.
that's right.
But the only two people on payroll are Dan and Sheridan. Now, pretty soon, Sheridan's going to be 50% owner. So what's going to happen there is it'll be 5,000 for Jan, who's the full owner, plus 1,500 for Sheridan, and then 1,500 is just payroll. You don't have to get that detailed if you don't want to, but you could. All right. Now, the amount that was taken out is pretty easy. I could do equals. Well, I'm not going to show you how to do this, but we'll take 8,000 times matching payroll taxes are 6.45%. All right, we'll just fix it. So he's paying matching taxes of 516. He's already withheld 516 from his employers, but that's what he has to match. Then he does have workers' comp and he pays $157.72 a month, right? So that's going to go across every month. And then he pays into unemployment. And since he hasn't any claims, it's only $50 a month, okay? And this amount will be based on the type of work you have. So Evie, if you ever had to pay an unemployment, all of your people are sitting at computers. So your amount of unemployment is going to be a whole lot less than Dan's because his people are on ladders and they're outside. Okay, and they're actually, that ladder thing makes a big difference. So those are all set by the Department of Unemployment, all right? And then he pays health benefits to all of his employees, and his monthly is $225, okay? So his total payroll, this does not include independent contractors, is this amount, all right? Any questions? All right, now we're going to get into expenses. All right, so let's use Evie for expenses. Okay, so Evie, how do you get your clients?
At this point, a lot of them are coming by word of mouth, but I do have advertising. I have about 3 different kinds of advertising.
Okay, so here you can either put all 3 amounts, or what we could do is we could do subcategories. So for a subcategory, what we want to do is we want to indent. So let's just say you do Facebook. What else do you do?
Mailers, lots of sending out, yeah. And another one is I advertise at lawyer convention events. And another one is to advertise in the catalog.
Okay, so you can put as many as you want there, all right? And then you will have nothing here, but all of your money will be on these 3 areas, okay?
Gotcha.
Now, you can also do this if you choose, and a lot of people do. If you wanted, you could put total advertising.
Gotcha.
Okay, and then that would be a combination of those. Then we get into auto expenses. So who was it? Amanda. Is Amanda still with us?
No, she had to leave.
Okay. Amanda, like myself, is a consultant. So she's going to go, I go to my clients' locations, all right? So I work for BRC. They're one of my many clients. I go to BRC's office. I get to write off from the place where my office is. I'm lucky it's in my home. So I get to go from my office there and back. But I personally own my car. So I don't claim any auto expenses because at the end of the year, I tell them how many miles I drove, and I get that money on my taxes, subtracted on my taxes. Now, I know some people who will actually reimburse themselves for mileage, and both of those are acceptable. I don't do it because it's another little way of me saving money for taxes, okay? So that's why I do it. All right, so you're gonna see very little under auto expenses. Now, another thing with auto expenses is that I sometimes will pay for my fuel out of my business. The thing there though is it will not be deductible at the end of the year. So I either get to pay for everything when the company owns the vehicle, or I get expenses. I get mileage, all right? Evie, how do you work yours?
Well, that's definitely one that is a quandary for me at the moment. Because intermittently, I may have a client that for right at first, or let's say, let me put it another way, toward the end of the case, I may spend a lot of time going to the office.
Okay.
And
And you keep
and a
track
lot.
of your mileage.
Say that again?
Do you keep track of your mileage?
Yes, I
Okay.
keep a good
And then
track.
you charge them for it.
Yes.
Okay, then yes, you want to put mileage in here because they're going to pay for it. All right.
Yeah.
For you, I would probably have another category. I'd have two. I'd have auto expense that is personal or business. And then I'd have auto expense, and these would be reimbursed. Okay?
Yeah. Sometimes, Lou, that money, like let's say over the course of 2.5, 3 weeks, I've spent $200 on mileage, or I've had enough miles that that percentage is that money is, that piece of money comes out of what they've given me as a retainer.
Okay, so that would be reimbursed expenses.
Yes. Yes.
Okay, but suppose you have to go to Costco to pick up paper. All right.
Yes. Oh, I see. Yeah.
That would be business expenses, and you can
Gotcha.
separate those two. Okay.
I see the difference. Yeah.
Okay. Then bank fees are, many times we'll spend $2 to $3 a month just to get a copy of our of the checks that we write. Now, if you write a lot of checks, I would recommend you spend that $2 to $3, because if you're ever audited, you have all of your checks there and you just copy them and take them to the IRS. I've been through 5 audits, none for myself, thank God, but with clients. So the more paper you could give them in an audit, the better off you are. So I break it all down, okay? So yes, but suppose you were a bad girl this month and you had a $31 charge because you bounced a check. That all goes under bank fees, okay? Then we have cleaning. Cleaning can only be subtracted if you are in an office where you have someone cleaning, all right? I would love to have my house cleaner come in and I could write it off, but I can't. I mean, if I wanted to get real picky, I could say that 200 square feet in my house is my office. So and that's 1/10 of my house, and I could take 1/10 of my cleaning. I don't go that far. That to me is brain damage, but you could, that would be a legitimate expense, all right? So we're going to say $10 there. Then computer expenses. This is one, okay. So most of you have some kind of, either have CenturyLink or you have Comcast. That could be under computer expenses. It could be under dues and subscriptions, or it could be under telephone. All 3 of those would be correct for your Comcast bill. The only thing I'm going to say here is be sure that you put it in the same place every month. So don't put it in telephone one month, computer expenses another month, and then dues and subscriptions a third month, all right? Just keep it consistent. So let's say suppose you have a computer person who's on call. So you pay them $50 a month. Whenever you need them, they're there. That I would put under computer expenses, all right? Then we have contract labor. This is also independent contractors. This is really important to keep track of. The IRS is trying very hard to cut down on the underground economy. So if you pay any of your contractors $600 or more, you better send them a 1099, because if you get audited and there's no 1099s that go with that, either contract labor or independent contractor, they're going to disallow it and you're going to be paying taxes on it. All right. Any questions on that? Okay, so Dan, give me an idea, or Evie, we're working with you here. Give me an idea of, on a big case, how much in 1 month would you pay an independent contractor? Say that OBGYN nurse.
Well, we can do it 2 ways. And the one that we try to do most is most independent contractors work for themselves. So we arrange between the independent contractor and the lawyer. The cost then goes directly between them, and we don't pay the independent contractor.
Okay, so that won't show up on your books at all.
That's correct. That one does not. The one that would show up on my books is if I hire an independent contractor to work for me, to do something for me. And I would say the most I've paid one is, it was a little less than $500. I think it was $400.
Okay. All right. Now I'm going to go to Dan for a minute. He knew this was coming, didn't you, Dan? Okay. So Dan are all of your installers independent contractors? Dan? Are all of you're on mute. Okay.
Yeah, we are. Okay.
So all of your installers are independent contractors?
Yes, they are. Everybody in the field is independent contractor signed off and have to have their own insurance and certificate. Yes.
And because you have so many different independent contractors and they're being paid so much, I would have, see where I have payroll? I have a whole section for payroll, even though it's an expense. I would have a whole section for independent contractors for you. Okay?
Yes, that's how we keep track of the 1099s that go out. Yeah.
Correct. So that's, I think Dan's probably the only person who has that. All right.
Yeah.
Then we go into contributions. Well, let's go to consultants. Sometimes consultants, you could put them under independent contractors. How I separate it is, if someone is helping me to learn something, I consider them a consultant. If they're doing work for me, I consider them an independent contractor. All right. If you want to put them all under independent contractors, that is acceptable. All right.
Yes.
So it's very common for me to have like 4 or 5 clients and then they're on retainer. All right. So I would be on theirs as they pay me $1,000 a month. I guarantee them a certain amount of time. And so that would be on their books, not on mine. But I'm just showing you if you do have someone like that. Now, contributions. Unless you are a C Corp, all your contributions are going to be sent back on your personal taxes. So whether you do these on your contributions from your personal account or your business account, they're going to show up the same way, but keep track of them. Now, there's another piece, and this is going to be really important for Emily, especially. a lot of times you will be asked, will you give us a gift certificate or a game or something for one of our silent auctions, all right? You want to keep a separate account of everything you do because those are considered in-kind contributions and they're completely different than money contributions that go here. So at the end of the year, when you go to your accountant, you could say, this is what I had in contributions, but this is what I had in in-kind contributions. And Emily, you're going to be asked that quite a bit. Okay.
Lou, I have a quick question with that then. If I have given a client a certain amount of services free as a trial to use my consulting business, and it amounts to, let's say I give them $150 worth of services free, what do I do with that?
I would put that under its own category and ask your accountant how they want to do it.
Okay.
Each accountant likes to do that differently. So I wouldn't even keep that on here because it's, I'd have a whole nother sheet for that because it's not money coming out of your checking account. And so this is really money that you're paying. So see down here, you can put it out there in one of these areas down here on an Excel spreadsheet.
Gotcha.
Okay. So we tithe our $23 a month to whoever. Okay. Dues and subscriptions. How many are members of the chamber or are going to be members of the chamber? Nobody's a chamber member? Dan, you are, aren't you? Yeah. So this would be your chamber membership. This would be a lot of people who do services like Gina, you may have software that you pay for every month. That would be under dues and services. Okay, so software is one that goes under that. Any groups that you belong to, any professional groups that you belong to, whatever you pay them would go under dues and subscriptions. Some of those will be monthly, some of them will be once a year. It doesn't matter. Whenever you pay them is when you would put it in your spreadsheet, okay? So you pay $100 a month in subscriptions, all right? Now, continuing education. You take the launch program or you take this class. Now, Emily is in our launch program and Dan did take Sheridan took the launch program. So it was, and you pay $295, but this month you're taking 3 classes and they're $10 each. So that's another $30, okay? I put the $295 on the month that you paid it, and the $30 or the $10 on the month you paid it. So in October, each of you who paid the $10 for this class will put it under there. Got it? All right. Entertainment. 2 years ago or 3 years ago, the IRS changed the entertainment rules. So you could not, excuse me. 2 or 3 years ago, they changed the entertainment rules where, like, if you bought season tickets to a game or you took someone golfing, they're no longer allowed to deduct those. However, if you take someone out for a meal and you pay for it, you put the full amount in here. So we went out and we paid $67 for breakfast. Yes, it can come to that much, all right, for 2 people. So we paid $67 and I paid for all 3 people that were at this meeting, all right? Now, what will happen is that it is only deductible 50%, but you want to put the whole amount because the 50% is going to be taken off somewhere else. All right. You put the whole amount, then the accountant takes the 50%. All right. Gifts. The rule on gifts is you cannot pay more than $25 a gift. Now, I decide that what I want to do for gifts this year is I want to buy a case of wine and a case of really fancy wine glasses. And all of my clients are going to get a bottle of wine and 2 wine glasses. Well, I'm sorry, the wine, I buy all at once. I'm not going to go buy 1 bottle of wine at a time. So I would put the case of wine. So say I pay $24 a bottle times a case, which is 12. So I actually pay $288 in November. I will make a note to tell my accountant that that was 12 different gifts. All right. Make sure you write down the number of gifts that came out of that 288. All right. Now, suppose I then buy glasses that are $10 each. I'm only going to be able to subtract $25 per person. So be careful to keep all that in there, in your accounting, in your bookkeeping. All right. Insurance. Sometimes we pay our insurance all in one sum, and we would put it in whatever month we paid it. Sometimes we pay our insurance all together, or we pay it monthly. So I pay mine monthly to the tune of $243. That's my auto, but that's not deductible. So I shouldn't have it in there. Who could have that auto deductible in there? Dan, who owns your trucks? Do you own the,
Why is the auto insurance not deductible?
do you own the trucks, or does the business own the trucks?
Oh, okay.
Okay. If the business owns the trucks, then he can deduct his auto expenses. He
My
can
business,
deduct all
yeah,
of
my business owns everything.
Pardon me?
My business owns everything, including.
Okay. As long as the business owns it, all your repairs can be paid for it. Okay. Here's the tricky part though, Dan. When you went from Dan the Window Man to Ryan Companies LLC, what did you do with the trucks?
Yeah, the trucks are owned under the LLC.
Okay,
So
so
I licensed that. I licensed that and insure it under the LLC. That's what I mean. So not.
Okay.
Yeah.
But suppose that Dan the Auto Man owned 2 of the trucks. They weren't in lease, they were owned by that corporation. Okay?
Right.
Dan the Auto Man. Dan the Window Man owned those trucks. Now, you're closing Dan the Window Man LLC and you're opening up Ryan Corporation, right?
Right.
What happens is you have to, Dan the Window Man has to sell those trucks at a fair market value, in this case, to the Ryan Corporation. All right. But what you told me is you lease the trucks under the Ryan Corporation. So then you can write everything off. But that's the truth. So a lot of people will say, oh, I'm just going to keep my auto with the business and have the business own it. But when the business closes, you have to pay fair market value. You have to sell that at fair market value.
Buy it back. Yes.
Okay.
Right. Right. Yeah. In this case, the Dan the Window Man is the DBA, but it's Ryan Companies that owns all of the assets, including my tools and everything I purchased.
So Dan the Auto Man is kind of a subsidiary of Ryan Corporations.
Yeah. So it's
Okay.
actually, yeah.
All right.
Companies are
But that's for the rest of you too.
Right.
Like suppose, Emily, you bought a truck you buy a car that you drive and you put a sign on that car. You could pay for the sign out of the business, but if the car is yours, you still have to pay the auto insurance.
Right.
Got it?
Yes.
Okay.
Understood. Very
Then
good.
we go into licenses. Evie, how often do you have to upgrade your license?
Yes, and I have to be licensed in all the cities, so that has to be kept up every year.
Okay, so that's for you, Dan. And Evie, you have a nursing license. Do you still keep your nursing?
Yes, and I am still nursing, and I do have certain kinds of competencies that I have to keep in place for the nursing that I
Okay.
do.
So
But
what?
now I don't have to have those for my business. So how does,
It's still something that makes sense for you to have, okay?
and my
So-
liability insurance, I do put that in the business.
Okay, but under your license, when you pay for your license, is that every year, every 2 years, every 3 years?
It's every 2 years in September.
Okay, so every 2 years in September, you have to pay X amount. That would go under licenses, okay? But in order to get that license, you have to take classes. That would go under education.
All right, gotcha.
Right? Now, whether those classes are for your nursing license or they're business classes like this, both of those are classes that can be deducted. So I would pay both of those out of your
The
business.
business.
Okay?
Question for you.
All right.
So let's say I were to go to like a TED Talk convention
Mm-hmm.
and I was going to like listen to a bunch of speakers all talk about business. Would I put that under education, or would I wind up having to put that under like entertainment or one of the other ones? Because technically it's not like classes per se.
Okay. I would put that under dues and subscriptions because you're paying to get in.
Mm-hmm. Cool.
And wear your geek shirt, which you paid for under advertising.
So if I was selling the shirts for merchandise, then would I still put them under advertising, or would I put them under
Cost of goods.
cost of goods? That's what I thought. Okay, cool.
Yeah. Now, suppose that, and I'm trying to give you a lot of different scenarios here. So suppose that you don't look good in a t-shirt. All right. I don't wear a t-shirt. So
Always in a t-shirt.
I go out and I buy a really nice blouse that fits me. And then I take it and have it engraved for my company. All right. I put the engraving costs under advertising.
Okay.
All right.
Yep.
Okay. License we talked about. Miscellaneous. There should be nothing in miscellaneous. In QuickBooks, this is funny. In QuickBooks, instead of having a miscellaneous, they have a category called Ask My Accountant. All right. That's the same thing here. If you don't know where something goes, go ahead, put it in miscellaneous, but talk it over with your accountant because nothing in miscellaneous can be subtracted. All right. So that's just a holding area. All right. Then the next one we have is office expenses. That's your paper, that's your ink, that's your cleaning supplies, that's everything you buy for your office. All right. That's what goes under there. You will sometimes see office supplies and office expenses. It's really hard to make that up of which way you want to go on that. So just put it all under office expenses, okay? And what's really interesting is you can't go to Home Depot anymore without getting, you know, $60, $80, $100 all the time. So that's going to be a pretty penny that you're going to have under office expenses, and write them all off on that. Now, suppose you go to Costco and you buy your paper at Costco, and you buy your ink at Costco, and you buy maybe a printer at Costco this time. And then you go and you buy food at Costco, and you buy some cleaning supplies for the business, but then you buy some cleaning supplies here. So what you want to do is keep that receipt for Costco, break down how much was for the business, and put that amount in here. Don't try and write the whole expense off, because if you ever get audited, they're going to ask for that Costco receipt. All right? Postage. If you're someone who does a lot of mail advertising, I would keep this category. If you're a person or a business that only does printing like once a year and says something out, I'd put it under advertising, right? So you could put it in either place, just depending on how much it is. Okay? The next one is the same thing, printing and copying. If you are going out and you're printing a whole lot of material, then you want to keep it under printing. But if you're only doing printing a little bit, you can actually keep it under advertising. Any questions? All right, professional fees. This I consider attorneys, I consider accountants, and I consider certain kinds of consultants professional fees. All right, so these are money you're paying out to someone to help you. All right. Any questions on professional fees? Yes.
Yeah. So what would be the difference between a consultant and a professional? Because you've got consultants on line 49, and then you've got professional fees on 63. So it's like, I thought that we were paying the consultant when that.
This could be, and it could go either place. You're right. It can go either place.
Okay.
Normally, I say that any consultants that are not an attorney or a lawyer would go under there.
Got it.
All right.
Okay.
Again, as long as you're consistent, you could put it either place. Good question. Good catch. Okay. Postage, printing, professional fees. Now, rent. You'll see I have one in Denver, one in Louisiana. This would be if I had two locations, I would break down either the mortgage payment or the rent payment by location. All right. So Emily, when you get so big that you have a place in Littleton and then you have a place in Arvada, I would separate those. All right. You don't have to separate any of the other expenses, but those two I would. All right. Now, whether it's rent or mortgage, just put the right word in there. All right. Okay.
So question on rent real quick. So with most leases and stuff, you get your regular rent and then you also have CAM that goes with your rent. So you putting it all together or are you doing it separated out?
It's all going to come out the same place on taxes. But if you want to keep track of it, I would have one that says rent, and then I'd have an indent that says CAM expenses.
Okay.
And I think that might be a really good thing because then you could take a look at that at the end of the year and talk to your landlord about it when the next time you come up for a renewal, right? Repairs. If you own the equipment, you can't have the company pay for the repairs. If the company owns the equipment, you can have them pay for the repairs. That's more on, I would say, autos, but also on big equipment that might need repair.
So here's a question. I'm going to have an espresso machine, right? So an espresso machine, not only will it break, but also it needs to have maintenance about every 3 months or so. So with that, would I count maintenance under repairs?
I put repairs and maintenance,
Okay.
which is how I usually put it. Okay. And yes, that would all go under there.
Okay.
And you're going to have coolers. They may need to be repaired. But your car may need to be repaired and you need it to get to work, but that's not a business expense. All right. Taxes, these are the corporate taxes. If you're a C Corp, you would pay those. Okay. Telephone, this is my favorite question, so I will answer it. Do I have to separate how much I use my cell phone for personal than how much I use it for business? The answer to that is no. Just write off your cell phone. Okay. Now, I have had people, and I actually have one right now that has two separate cell phones. One she uses as advertising for her business, and the other one she uses personally. I'm only recommending, again, this is totally up to her, but I'm recommending that she only writes off one. Now, what happens if you have a cell phone and a landline? You can write off both. And a lot of you will have both. Dan, you probably have both, don't you?
You talking to me?
Yeah. You
Okay.
have both a landline and a cell phone?
Yes. Yeah. Landline, computer, and then cell phones times 3.
Right. But you give Sheridan a cell phone that he would use for business, correct?
Correct.
So you
Yes.
can write off both of those. So
Yeah.
2 cell phones and 1 landline. They'd all go under telephone, but that's where they would go. All right.
Very much so. Yeah.
And then travel. I like to break travel down. So transportation. I'm seeing a lot of people who are now taking Ubers to the airport. That's part of transportation. And then the cost of the airline is transportation. You take either an Uber or you rent a car. That's all transportation. Okay? Put it all under that. Evie, this is probably more for you than for anyone else. Then we have lodging. That's where you stay. Now, if you stay at your best friend's house and they give you a receipt for staying there, then go ahead and write it off. But you can't just say, oh, wow, I stayed at my friend's house and I want to write off $5,000 because they stayed there. And then meals, I'll get to you just 1 minute, Gina. Meals are what you eat while you're traveling. Okay. Now, suppose you're traveling and you take one of the people that you meet there and you take them to dinner. That would have to go under entertainment, but your own meals would go under meals. Okay. Gina, you had a question.
I had a question on lodging. So if I have lodging and maybe it's not for me, but it's for one of my bands that's coming in, that would be an expense on that project, right?
That would definitely be a cost of goods.
A cost of goods. Okay. Okay.
This lodging is if you have to stay somewhere.
Okay.
All right. Good question.
Okay.
And you know, if you're paying them a per diem, that would be in there as well. And then there's utilities. Again, utilities are what you're paying at the business, not what you're paying at home. Now, I said my office is in my house. Evie, is your office in your house?
Yes.
Okay, so what we can do as offices in the house, we can write off the percentage of our utility bills that are the same size as the office. So in other words, my office is 200 square feet. It's 10% of my house. So I get to write off 10% of my utilities.
Got it. And a question back on postage. If I have a specific mailing at any given month, let's say I send out 20 letters in the month of January that contain 3 or 4 different items that are advertising materials. And then, of course, there's the postage. Can I presume by putting together a cost of that particular mailing, does that become advertising or is that postage? Postage is essentially the stamp.
It's really up to you how you want to do it. It's all advertising. You just have it in different places. So you can put it all under advertising, especially if you're only doing it once a year. I'd put it under advertising.
Okay. And there are also times when some lawyers want a very short report of 2 or 3 pages. Some lawyers, especially at the end of a case when they're getting ready to go to trial, might want a full report that's going to consist of 200 pages.
I absolutely put that under printing.
Okay.
Now, if they want 4 or 5 pages, that's one thing. But if they're wanting 200 pages, that would have to come under printing.
How do I use that when that particular cost is going to be contributed to that particular client's service? Does that come out as his money?
But you're getting reimbursed for it.
Yes.
So in your income, you're going to show the reimbursement for it.
Yes.
Okay. Now, if it's for one client and they're going to pay for the whole thing, you could put that under cost of goods.
Okay.
Okay.
For the most part, let's say if a client gives me $5,000 as a retainer, I have not up to this point put that $5,000 as income into my account until I've spent that money and that money is mine.
Okay.
Because up to that point, let's say I only spend 4,000 of it, then 1,000 is either held for a future case or it's reimbursed to them.
Correct. All of that is correct.
Okay.
Now you have a whole separate account though for your escrow, don't you?
Yeah.
Okay. And I don't want to get into that in this meeting, but if you have some specific questions about your escrow account, we could talk about those on a one-to-one, okay?
Okay.
All right. So then what happens is down here we have our total expenses. Now I'm going to make this larger, maybe. There it is. So up here you can see that we made $2,000 and we made $1,715 in cost of goods. And then I didn't put all the expenses in, but in expenses, we had, let's say, well, we had $61 in expenses in that column because I put in another. So you can see here that this month I lost that much money. So how I get to my net income is I take my income, which is B11, all right, that's the total. And then I minus my cost of goods, I minus my payroll, I minus my expenses, and that's how I get my net income. And that's how much you either overspent this month or you made in profit. Okay, so this poor company has lost a lot of money. Of course, it's a combination of 4 of your projects, but now you see how it works. So this is how an Excel spreadsheet should work. Any questions on the Excel spreadsheet?
Nope.
Okay, now I'm going to ask, do you have any questions? These categories are the same categories and get used the same way in QuickBooks. All right? Gina, you said that you want, no, that was Evie. Evie, you said you wanted to be able to understand that you're giving your accountant everything that they want or need. Can you see how you could do it from both here and from QuickBooks?
Yes, I've enjoyed your detail, and I've enjoyed the opportunity to make it specific to some of the things that each one of us is doing. I think it clarifies nicely. I need to put my business into the paper in order for it to probably generate more questions. But I do feel like I got what I came here for.
Okay, good. And as I said, we could do a one-on-one to talk more about that escrow account too.
Okay.
All right. And Gina, I know you went back to check on that pie for us, but when you come back, did this help you understand what goes in each category?
Yeah, I mean, after having them set up the QuickBooks and they've kind of walked me through it, a lot of this makes sense. I
Okay.
think I have so many details on all my events. So I think I do need to still do individual spreadsheets, which is why I wanted copies of all these templates, because then I could have that almost like each one of my events is its own little business.
Absolutely.
Because putting it all in QuickBooks is really, it's expensive, number one. And I don't think I need that much detail there. You know, my bookkeeper or my accountant just wants like bigger pictures, like I spent this much on marketing. He doesn't need to know it was for these 10 events.
Correct. That's why QuickBooks, what's nice about QuickBooks is you could break it down by job. So you can have a job and all of these categories got broken down by job. But at the end for your accountant, she doesn't have to know what each job was. So
Right.
That's why QuickBooks would probably be better for you.
Right. So I just need to I need to learn more about the job part of it. That's kind of what I need to double check and see how she entered it in there. I did have someone else enter it. I was brave and gave it all to someone else.
Okay. Well, see if she's entered it that way. And if not, I can probably help you. So just call and get on my schedule and we'll do a one-on-one.
Okay.
Same thing with you, Evie.
Super. Thank you.
Thank you.
All right. Amara, I'm going to turn it back over to you. Do you want to say anything? You're muted.
Yeah, it's showing that now she's muted.
Okay, I'm going to stop.
Can't hear you.
Okay. Well, thank you all so much.
Oh, she's saying 1 second. Hang on.